Welcome to Small Business 21st Century, and this is another episode of the Wealth Zone University, and I'm your host, Don Moragne. Thank you for hanging out with us today. Over the last few sessions, we have been talking about capital, business access to capital. We believe that there is money out there for every small business, and we had some very talented and devoted bankers who explained and talked with you about how banks operate, how non-banks operate, so that you could see that there's a variety of options out there for every small business. But we also tried to make sure that we told you that you have to be prepared for that banking. And so today, we're gonna go deeper into that, and we're gonna put up a slide now that we're going to leave up for a minute until I go through all of them. That is very important, and it's called banking etiquette. Banking etiquette. Now, why do we use the word etiquette to talk about capital and this subject? It's because, excuse me for looking down, etiquette is a set of rules, norm, customary, or polite behavior in society or among members of a particular profession or group. You get that? It's the accepted behavior of a professional group. Now we're talking about banking. So banking etiquette is what we need to be doing in the banking situation, which leads to capital, which leads to capital access, which leads to capital infusion. It's on our small and medium-sized businesses, which we call SMBs, to be prepared in advance to get the capital. So we're going to talk about that, and with the slide, we're going to go through each one of them. So the first one for business banking etiquette is become a savvy bank manager. Now what that means is that you, as the CEO of your company, have to understand what banks look for, what banks want to see, what banks want you to have, and what kind of banks actually work with your industry and your type of company. It's also important for you to realize there are different types of banks. There are community banks, there are credit unions, there are national banks, there are multinational banks, all over the place. The question that you have to answer is, which banks work with my company and my industry? That's number one. The second one is make banker relationships early. Now notice that one says banker, not banking, because we believe it's the banker that makes the difference, not the bank. So once you select the type of bank that fits your company and your needs, then it's up to you to identify the people inside of those banks that will be able to work with you. That's make a banker relationship early. And early is the key here. You want to start that relationship before you need the capital, so that you can learn them, they can learn you, and therefore when you're not in the room and they're in with the underwriters, they have a good handle on who you are and they can speak for you, okay? That's extremely important. The third one is identify a banker advocate. You've made relationships in these banks, but there's one person who just has an affinity for you and your business. That one person who wants to make sure that you go all the way. That's a banking advocate. That's what you want, okay? The next one, prepare in advance and fully. That's on us. We need to know what information and documentation we need to have. We need to have it done correctly and appropriately and presentably, and it needs to be accurate, and we need to understand it, so that when questions come up or presentations are needed, we are the experts about our own business and our own industry. Next one is own your company's financials. I can't say enough about this. In WZU's episodes before this one, we drill and hone on that. These numbers are your company's lifeblood. If you don't understand them and you don't know them, who does? It's your accountant's responsibility to educate you about your company, your numbers, and the performance, okay? And the last one is know your cash flow. The AR stands for accounts receivables. KPI stands for key performance indexes. and the DSCR stands for debt service coverage ratios. These are numbers that don't come into your business on a continual basis, but they're numbers that help you determine what your performance is and help you predict your performance. But even more than that, these are numbers that everyone else outside of your company looks at to judge and value your company. So you should be aware of those, okay? So take a picture of the slide, because we're gonna put it down now and we're gonna go into talking about real life situations, okay? Savvy bankers. My first year in business, I was a solopreneur, and I realized in order for me to become a real business, I had to leverage myself by bringing on employees. But I didn't have any money to bring on employees. I met this banker. Her name is Joyce Chesley Hayward. She told me very frankly, sorry, Don, there's nothing that my bank or any other bank can do for you. But then she said, I will help you get ready. I was shocked. I didn't know bankers had that kind of affinity. I didn't know that bankers had that desire to help somebody. And so I said, what did you say, Joyce? She said, I will help you get ready to be bankable. Within 6 months, she had shown me and taught me and helped me prepare internally so that when I presented my business plan to her officially, she was able to help me, and within another year, I had a line of credit with 11 employees. It just happened. It was absolutely magical that I met a banker who became my first banking advocate. Joyce is now the CEO of a company called Fusion for Business. It's a financial management consulting firm. It's in the States and in Bermuda. So if you need an astute person who knows banking, business, and accounting, look them up, okay? The next thing I want to tell you about is we've got to understand that all the discussions about why businesses fail because of lack of capital are valid. But I believe they're self-fulfilling prophecies because we, SMBs, companies, you and I as CEOs, don't take control of the process. We let the bank control the process, and that's something that's got to change. I'll give you an instance. I've read that small businesses fail because of lack of funding, insufficient cash flow, that means you don't have enough money to pay all your obligations, lack of working capital, which means you don't have enough money to make sure that your company can continue and to grow, and limited access to capital and financing, excuse me, which means that we don't command the type of presence that will encourage bankers, non-banking, factors, fintechs, anyone who has the capital to give that capital to us, okay? And then because we don't do all of these things, businesses continue to fail, and as I said, I think it's a self-fulfilling prophecy. And so we, you, I, CEO, SMB leader, owner, whatever you want to call yourself, it's up to you and I to change that dynamic, all right? Now understand, money is available, capital is available. It can be banking, it can be a capital infusion, it can be a private placement, but all of those processes have their own special requirements. All of those processes have their own special mandates, and all those processes require that you do certain things in order to qualify for them, and that's on us. We can no longer say that they won't give us any money. What we have to be saying is that I'm going to qualify for that money. I'm going to find someone inside of those organizations that will help me qualify for that money, because I need it to continue to operate, to continue to grow, to be able to expand, and to dispel this entire myth that small businesses fail because of lack of access to capital, okay? So stick with me on that. So let's talk about these 6 things that we talked about, because I want to delve deeply into a couple of them to make sure that we know what we're talking about. So let's first start with finding a banking advocate. I met a banker, it must have been maybe 2 decades ago. His name is Marvin Clark. Marvin is now an executive, a corporate executive with JP Morgan Chase, and Marvin's so high up that I have to call his secretary, to call his secretary, to call his secretary to get to talk to him now. But when we first met, we were on a Chamber of Commerce event, and we just started talking. And Marvin, very much like Joyce, was the kind of banker who says, let me know how I can help you. I mean, I just love those words. Let me know how I can help you. Marvin and I's relationship has been solid the entire 20 or 30 years that we've known each other, and Marvin has moved to different banks. Wherever Marvin went, I went and I took my clients. I didn't care what the bank name was. I was going with Marvin because Marvin believed in what I was doing and what I was trying to do with our CFO clients. That's extremely important. It's finding a banking advocate, establishing a relationship with that banking advocate or advocates, because you should know more than one, and then making sure that you are someone that that banking advocate can rely on. That's extremely important. It's called a relationship. It has to be mutually beneficial to both parties in it. It's a relationship, and that's extremely important. And Marvin Clark and Joyce Chesley Haywood, and I've got a lot of banking relationships and friends, but these two will always stand out because Joyce was the first one to believe in me, and Marvin was the first one to say, regardless of what you need, your credibility is good with me, your clients therefore have credibility with me, and amazing things have happened for my firm and my client's firm, okay? So Joyce got me the first line of credit in my second year, but when I started my government contracting firm 20 years later, I just happened to walk in and say, Marvin, I need a line of credit. It was done because Marvin and I had spent all this time together. He knew me. I didn't really have to do anything. He took care of everything, okay? That's what I need you to understand. You need to make sure that you have a banking advocate. Now, let's get to the important stuff. What do SMBs, what do you, CEO, have to do inside of your company to warrant that relationship and to get that credibility and to be ready for what we talked about? If you looked at the prior episodes, and I'm sure that you did, with Chris and Tiana, they told you in no uncertain terms what they need to see in order to begin to help you. They told you in no uncertain terms that you have to have some kind of business plan. It doesn't have to be 90 pages, but it can't be one. Your executive summary might be 1 page, but they want to see the entire business plan because they need to know that you know where you want to go, how you anticipate you're going to get there, and the metrics that you're looking at as milestones to determine how well you're doing all along that continuum. Because they deal with a lot of industries. And so you've got to make them knowledgeable about your company, your industry, and your leadership style. Because you, CEO, you're the most important aspect of that whole pyramid. The industry's fine, the company's fine, but they're relying on you to make sure that you convince them that you are worth working with, okay? And so that's important. So we have to understand, really understand, that lack of capital for small businesses, not true. It's out there. There's no free money. It's gonna cost us interest and things to pay it back. There are many sources, and some of the sources we'll discuss later on, but besides banks, there are non-bank outlets. There are factors, accounts receivable financing. There is fintechs, which are brand new and they're all over the place. There's capital infusion and private placement. There are so many mechanisms that you have available for your company, but it's our responsibility. CEO, your accountant, and your management team to make sure that we're prepared in advance. The objective of the Wealth Zone University is to change your mind about money, to change your financial future. Hi, I'm your host, Don Moragne. In the Wealth Zone University sessions, my guests and I talk about a wide variety of business, financial, and other worldly topics. We are seeking to both educate and entertain you. We emphasize that the information and discussions are my opinion, perspectives, and ideas, and those of our guests. We in no way intend to deliver or provide financial, tax, or business advice. You should consult with your tax, accounting, financial, insurance, and legal advisors regarding the impact, application, or pertinence of any topic or opinion that we share on the Wealth Zone University. So let's get specific about what we as SMBs need to be doing in order to qualify for the capital that we absolutely are going to need to reach success, okay? Forgive me for looking down, but the first is business and financial plans for capital infusion, okay? I'm not talking about your normal business plan. I'm talking about you need capital, you need $250,000 line of credit. What do you need it for? What are you going to do with that? What is the use? What is the application? What is the outcome? That's the business plan that I'm talking about for capital infusion, specifically for the capital that you're looking for. That will educate you and your management team, but it'll also impress the banker that you have thought out the process. And believe me, in my experience, too many times I've seen companies that get the money, and before I can get there to help them use the money's already being used. So it's imperative that you make sure that you have documented a plan for the use of the desired capital. Financial management systems. We talk about accounting systems all the time. In addition to an accounting system, you need to start expanding your accounting system so that it takes in the indicia of performance we talked about before, KPIs, all of that stuff, so that you can start to begin to determine how well your performance is going and the milestones that you need to be aware of to make sure that your company is growing. 3, you got to have current financials, timely and current financials, and you have to have current tax information, timely and current tax information. There's no substitute for either one of them, and your accountant and your tax advisor need to be making sure that these things are accurate, presented properly, and explained to you so that when you're in the room with the banker, you can articulate everything that is in these documents. Remember, the Wealth Zone University says own your financials. They're your financials. Conduct due diligence. And what that means is, again, going back to figuring out if this is my bank and this is my banker, what do I need to know, or what do they need to know about me that can make sure that I get the funding, okay? You should have already talked to your banker about term sheets and everything else that you will need to be aware of in this banking relationship, or a banking advocate will absolutely talk to you about it in advance of trying to complete the funding and capital process, okay? If you're investing, that's a whole nother discussion which we'll get into later on. That's private placement, and so we're not gonna delve into that now. Just know that private placement is capital infusion, where we're talking about equity for capital, and that's a larger subject that we're not going to touch on right now, okay? So it's important to know that becoming bank savvy is the most important thing you can do. As we said before, it is not the bank, it's the banker, but it's also determining before you go to the banker which banks are working with your industry and your company. It's often said that community banks have more affinity for small businesses. And that may be true, okay? But once you've identified a few community banks and you've talked to the bankers, do not neglect the other banks that you have identified that work with your industry. Talk to them all. Again, that banking advocate might be at the one bank that you never talk with. You don't know. But that's very important. Figure out the bank and then develop an affinity with someone in the bank, and hopefully that individual or those individuals will become your advocate. Now remember, the advocate is working for you in the bank when you aren't there. That's extremely important. The banking advocate is working in the bank when you aren't there. They're working behind the scenes. They're working on the analysis of your financials, which absolutely goes on. They're working with the underwriters. They're working with, if it's an SBA guaranteed loan, they're working on that. And so it's important that the banking advocate have a really good feel for you as CEO and leader and business person, a really good feel for your business through the financials and projections and the business plan, and a really good feel for your industry, which is up to you to educate them about, because bankers know a lot, but bankers may not know everything about your industry, and it's up to you to make sure that I, as your banking advocate, know exactly what I need to know about your industry to be an advocate for you and your company. Now, let's get back to what we need to talk about. It's you doing things in advance in your company that would make you presentable, and that's a pretty big word, but make you presentable to a banking advocate. I can't stress enough that you've got to make sure that your financial internals are absolutely working properly. Timely financial statements, full financial statements, profit and loss, balance sheet that give you information that you can figure out. One of the most important indicators to a bank is the debt coverage ratio, which basically means that they're looking for your net profit. That's the money after all the money comes in and all the money comes out, sanitized for a couple of things like interest and depreciation. We can talk about that technical stuff later on, but still, they're looking for the net profit on your financial statements to be at least enough to cover the debt obligation for that year, if we're talking about a year, okay? That means the principal payments that you've got to make and the interest payments that you've got to make. And they have multiples which tell you how much of that net profit has to exist in order to qualify, and it changes from bank to bank, or it changes from bank source to bank source. I think that's a better way of putting it. But you've got to know what those are, and you and your accountant and your management team have to run those numbers before you go into the bank. Now understand, when you give the bank your financials, they're going to put it into their software, they're going to analyze it, and all of these performance indicators that we talked about, they're going to be part of that analysis. You should have done that with your accounting and your management team before you take the information to the bank, and you should have talked to your banker about what those key indicators that they're going to be looking for, say to them, and make sure that your financials show at least that, okay? Again, if you go into a bank and their debt service coverage ratio, sorry, Tiana, is 1.2, you need to know that, because if you don't have 1.2, it's going to be really hard for that particular banker to make some headway in your particular case, okay? So please understand this. Banking etiquette is you, if we can put the slide back up, is you making sure that you take care of these 6 areas. And I can't stress this enough. Small business owner, CEO, potential CEO, this is our responsibility. Our responsibility. And the reason that it's said that we fail so much is because we don't prepare in advance. So take it from the Wealth Zone University. We're smart people. Surround ourselves with smart people. Surround ourselves with folks who get things done and get things done timely. Remember, you're paying your support staff to support you. Make sure that they do, make sure that you're ready, and make sure that you know that there's capital out there, various sources of capital. The one thing you want to do is get the least expensive capital that you can, but you want to be prepared to make sure that you and your company are prepared in advance to make that happen. And if you look at the banking etiquette slide that we've talked to you about, you will always know exactly what you have to do to make sure that you're bankable when you get to the bank. Hopefully you'll find a Joyce or a Marvin to guide you along. And there are many of them out there. You've met a few on the Wealth Zone University. Make contact with the various banks that you feel can help you. Find a banking advocate to make sure that you can move through that process easily. And make sure that you remember self-fulfilling prophecies. We don't want those anymore. Let's take control, okay? We will see you next time, and happy banking. All you WZUers, thank you for being there.